Brennan Oglesby, business card say BK Oglesby for CEDCO, just to kind of differentiate a couple different facets of myself. Again, I'm the executive director of the Community Economic Development Corporation, also known as CEDCO. So much of this budgeting stuff I've been doing for probably over 20 years that it's almost kind of boring to me now. And so I'm trying to kind of reinvent myself a little bit, which is actually a conversation LaToya and I have had before. So I do enjoy it. I do actually enjoy teaching it. So doing workshops and things along this line, I think is something that I really do enjoy. Sitting down and doing the data entry myself is really something that I'm overly excited about. But actually teaching people and helping them figure out how to budget themselves is definitely something that I do enjoy. It's part of what I do enjoy about being an entrepreneur and actually work with other entrepreneurs is actually the opportunity to be able to learn and to see other people grow their ideas. Actually, you know, Shartae is a good example of, you know, someone that came in a year ago and now she's up and running. You know, just the excitement that I keep hearing about pennies and watching Helping Hands grow. So it's really good to see these businesses grow. And so that's what the organization is here to help you do. Obviously, there's a lot of demand out there. You know, sometimes I do feel bad, and I'm sure Shartae probably wants to keep me in a knee from time to time because I'm not there enough. But there is huge demand to help other entrepreneurs here. So I do want to kind of put that out to you guys to say, hey, you know, we're out here growing, but there's other businesses that need our help and need our assistance as well. So, you know, I know we're all stretched a little bit thin, but we're all here to help. We can only do so much, but we definitely are here to help us. So that being said, again, I'll kind of formally jump into this a little bit more. Probably erase a few of these points. But when I talk about budgeting, what comes to mind? What does that mean to you guys? Because as you can kind of see up here, that means different things to different people. They are all relevant, but if I say budgeting, what does that mean? Being able to control money. I like that. I actually haven't heard that put that way in a while. Put that way. That's probably one of the best definitions I've actually probably ever ran into, being able to control money. And I added to that probably understanding control money, but that's actually what so much of this is about. Anybody else, if I say budgeting, what comes to mind?
Allocating.
Projections.
So when LaToya mentions projections, what does that mean for you guys? Like when would that have value?
In the future.
In the future. And part of what it goes about, like LaToya mentioned a little bit earlier, a couple other people did about, you know, doing your kind of your year-end statements, your profit and loss statements, your balance sheet statements, your cash flow statements. Those are all important. And most time when people do think of budgeting, they do think about projections in the future. But once the future's already gotten here, you actually wind up comparing your budget versus your actual, is what they call it a lot. So can anybody give me some examples of when preparing for the future is going to be beneficial, just for your business? I don't even want to say in general, but for your business. So Shartae, we can't do that. So give me some examples of when budgeting would help out. And I'll kind of help out with our numbers. We looked at starting with one client and growing to 4.
First, we did assumption budgeting. That basically, I was basically doing just assuming what my budget should look like, and some of the numbers were off, and some of the numbers are dead on. But
From what we assumed versus started?
Like a year and a half ago to now, it's all like give or take less than probably like $45 off of my budget.
Oh, that's good.
Wow.
But
Who helped you with that?
what?
Who helped you with that?
Who helped me with what?
With the
He
budget.
said, who else was?
Well, Brent, we started off with the assumption budget, and I just went off and learned from, just
That's
went
awesome.
back into my final projection and just went off of that. And so now I'm stuck somewhere. But I know what I need to look at, I know what my money should look like.
So you're only off about $45, huh?
Yeah, it was off about $45.
That's awesome. Let me borrow some money. I'm just kidding. I'm just kidding.
It's basically because you don't know what the numbers are.
Sure. That's
because
awesome.
You're dealing with contractors, and when you negotiate with contractors what you want, you just don't get. But and I notice now I'm going to redo my budget. I need help to redo my budget and go with actual numbers and what actual I need help in and actual what I'm doing and the reason why I need the extra income to come to my numbers that I'm looking at.
Perfect. It made me smile hearing that, man. Heard I put a lot of work in understanding your numbers, man.
Sensei, the student.
And yeah, no, seriously, like, again, we're going to delve into some more of this, but what really stuck out, and it actually made me realize that, you know, Charté has soaked up a huge amount of information, actually picked up a lot on her own, but this to me is where almost all budgeting starts with your assumptions. And assumptions is basically how Charté articulates. It's just saying, you know what, I really don't know what these numbers might be, but I have to start somewhere. And for me, that's, and actually a lot of clients I work with, that's what winds up being very, very difficult about the budgeting process. And one of the things I remember hearing quite frequently, well, how do we know? How do we know? And really, you don't know at first, which can be scary, because a lot of times going into business, especially certain personality types, you want to know the answer to everything going on. What that winds up happening is most times if I'm working with a client or whatever it may be, budgeting, and I'm kind of using budgeting and projecting synonymously because there's actually multiple financial statements that you can do budgeting for, but specifically I'm talking about future projections, if you will, stuff happening in the future. You actually wind up doing multiple iterations. Iterations meaning more than one version of it. So for example, your first assumptions might say, you know what, I don't know what, let's say you have a group home, but you don't know what cable television is going to cost, but you have an idea that it's going to be $100. And then you say, you know what, utilities, I don't know what it's going to be yet because I'm not up and running. Utilities is going to be, we'll just assume $500. Or if you have transportation costs and you're not sure how many miles you're actually going to put in a month, you say, you know what, okay, if we go 1,000 miles a month, here's what gas might be. You want the number of maybe, let's say, $400 for gas. And so what you do is you kind of put those assumptions on and figure out, okay, how does that look? Like, how does that model shake out? What does that mean of how much we're going to make and how much that we're actually going to spend on? So for example, if, how many clients do you think you guys serve a month? Couple hundred. So, and that's, so first assumption is a couple hundred. I'll just say 100 for easy math. And then you assume, okay, well, we have a couple hundred clients that we're working with. And now that you're up and running, it's a little bit easier to do some assumptions, but let's say you haven't started yet, you still have to figure some stuff out. So a lot of this is researching your assumptions. So a client, you might say, okay, well, on average, how much do you make per trip per client? And again, that can be kind of challenging because you might have a client that you only take 5 miles and maybe you get paid on mileage, and you have another client that maybe you have to take all the way to the VA in Milwaukee, and that's a 60-mile round trip or whatever it may be. So a lot of that, you know, can work out a couple different ways. Sometimes people say, well, the average ride is $50 for sake of discussion. And then and so you do that simple math, and that tells you basically, as an estimate, how much the organization or the company or you are going to make if you do 100 rides a month. Now, as you get more vans, you can actually wind up multiplying that out, or you can say, you know what, we do 100 rides, but we want to kind of break this down a little bit. And this is, again, where budgeting can get kind of challenging, and I guess I don't want to say scary again, but where it can get kind of challenging is because at some level you never stop really. You can always keep cleaning your models up, and at some point you have to say, you know what, this is just a guess. You know what, like it's a very good guess, it's a very close guess, like maybe I only have a $45 fluctuation, but because I have enough profit, that's not an issue. So what I mean by that is you can say, okay, we assume we have 100 rides, but 10 of those rides, 10% are going to be for 15 miles. 50 of them are going to be 75-mile round trips. And you can break it down to that level and actually do the math for each one. So there's a lot of different ways to do it. There's not really a right or wrong. Again, the budgeting is kind of more of a model. One of the best ways I've heard planning and business planning and modeling put together was it's really your map, but it's kind of a financial map for you. But the difference is it's a map, but it's not really the terrain. And so, for example, and today's a good day, you see a little bit of snow outside. So if you looked at a map of Racine, it would show you Main Street, it would show you where the buildings are, but that map isn't going to tell you it's snowing out today. It's not going to tell you that the speed limit is 35 miles an hour, but if it's snowing out, you actually need to go a little bit different. It's not going to tell you that there's a car accident up there that you're going to have to find a detour for. So by no means do you want to put this budget together and be so locked into it that if something doesn't go that way, it completely throws you off. Now, it can do that, but don't let it get locked up, because again, it's just a series of estimations more than anything. So that's kind of the gist on that.
So what kind of limit do you give yourself for estimations?
Normally, by the time I get to probably my final pass, I maybe have a 1 or 2% variation.
Okay.
But when I start a model out, so for example, let's say we're doing a real estate project.
Right.
And let's say, the basic assumptions we have are, we're gonna acquire the building, that's $100,000. And that's with closing costs and everything like that. And let's say it's a rehab project, so we're assuming the building's, 10,000 square feet, 50,000 square feet for rehab, so let's just say 50,000 for rehab, just for sake of discussion. We might have some contingencies, let's say another 5,000. Normally, when I start out kind of doing my initial assumptions, and Shartae can attest to this, I usually add a 10% kind of cushion or contingency when at my first pass, because I'm basically saying like, okay, I've done a good job digging into my numbers, but there's always going to be something I missed. I remember Shartae and I were working on stuff like we got most of it done, but we might have forgot about, maybe a license that we didn't realize we had to get, or I was bidding for the property over somebody else, and the sale price actually wound up being $110,000. And the other reason I like putting this contingency in here is because it basically tells me that if this project works at the contingency plus, so at 110% of what my assumptions are, then there's a pretty good chance that if the numbers come in better, it's definitely going to work then. So I'll start here, I'll put the 10% contingency, and then after that, I just really want to keep digging into my numbers. So if I say, okay, here's what I'm assuming the acquisition cost is, how am I coming up with that? Am I looking at this is what it's listed at, this is what it's assessed at, this is what it's valued at on the income stream, whatever it may be, and I'm going to dig into that. The rehab cost, if I'm assuming, initially it's a 10,000 square foot building, actually, that'd be low, but so whatever the rehab per square foot would be, I'm going to keep digging into that. So I might start getting estimates from contractors, which is again what actually I know most of the clients here have done. If let's say we had an insurance line item in here, what is it going to cost for insurance? We might assume at first pass it's $5,000 because you've talked to someone else who's in the business or whatever it may be. But you're not going to know what that concrete number is until you've actually talked to that insurance agent and said, you know what, it's not $5,000. It's actually $3,252.82, and then you can kind of put a tighter number in there. Or if it came in at $7,000, because you have this contingency piece right here, you're covered a little bit. So again, this here is just kind of a first pass. And what we're really describing here, and again, this goes towards the budgeting piece. This is what I would call kind of a project budget. And this, along with kind of my assumptions, is where I start almost all the budgeting that I do. Now, maybe not necessarily for my profit and loss quite yet, but if I'm starting a project, this is where I start with. Like, what is this project going to cost me to start with? And this is where I start with, and this is where all the assumptions are. So really what I encourage a lot of people to do above and beyond the numbers of it is really kind of understanding what is it that you need to start with. A lot of times people get kind of put off and say, oh, it's going to cost too much. And that's important. Money's obviously important, but I want to spend a huge amount of time figuring out what are all the different things you need to start this business. Because some of what you find out is actually maybe you don't have to pay for certain things. You might find someone here in the CEDCO network that you're able to swap services for. So there's a lot of creative ways. So for me, again, it's more important to figure out what are all the different things that you need to get your business off the ground. And then you can put a valuation to them. And then what they call it kind of sources and uses, meaning, okay, it might cost $100,000 to buy this, but how can you get somebody else to fund that? Or what type of creative opportunities are here? Or the rehab, you might assume it's a $50,000 rehab, but because you have your own contracting company, you can actually do that yourself. Or get this done for $10,000 or whatever it may be. Now, there's still a value here, but it allows you to get creative and say, you know what, this whole project is coming in at $250,000. I only have immediate access to $200 from the banks and whoever else it may be. How do I cover those gaps? And so that's actually another worksheet that I try to utilize a lot of basically sources and uses of funds. So it's basically saying, hey, here's where all this comes up to, where are we going to get this money from? Are we getting part of it from a bank? Are we getting part of it from equity, which is money you put in yourself? Are you getting part of it from partners and things along that line? So again, that's kind of one of the first pass assumptions to basically start a project.